What is up, degenerates? It is Halloween. It's 3:30 now as I'm recording this. I will premiere it soon after I am done. Usually I like to do after the close so we get some, accurate prices and everything, but it's Halloween. My wife and I are going to our daughters to hand out Halloween candy, and so I'm doing this now because we have so much to talk about. First of all, the easy stuff. Roundhill declarations today. 4 new funds, all declared a distribution, so we're going to look at those. Roundhill, you can get a payment every day. But the Friday declarations are on their single stock ETFs. And we'll start with Apple, AAPW. First, we'll look at the price. This is the price as of about 3 o'clock today. 42.79, up 0.29. Apple was up 0.23, so they captured a little bit more than that. And that's what Roundhill does. They seek to capture about 1.2 times the underlying, which you will see here. What stands out? Amazon up 10%. AZW up 13%. So they captured 1.2 as designed. Avgo was down 1.2. AVGW from Roundhill was down 1.89. So they capture a little bit more of the downside. So these funds are all different, but they're all great. I mean, it just depends on what you're looking for. Coinbase was up 6.16, or it's up 6.16 as of recent. It hasn't closed yet. COIW up 7.31, almost 1.2% capture. Hood up 7.08. Remember, yesterday was a bloodbath. Today, green day. And we see that a lot. So don't panic when things are down. Just buy more. That's what I do. HOOW up 8.55%, 1.2. That's what they captured. And you see the trend here. MSTR finally up 5.27%. MSTW up 6.67%, 1.26 capture as designed. Netflix was up 3.18, MSTW 3.76, 1.18 capture. So you get the gist of that. What else? Palantir is up 3.41, or is up 3.41. PLTW up 3.49. Tesla up 3.23. TSLW up 3.45. And the new one, Uber, there's 4 new ones. We'll go over those when we get to the declarations. Let's go back up to Apple. They're the first one. Their distribution declared today, which will pay next week. From 26 cents to 26 cents. That's a 34% yield. AMDW went from $1.49 to $1.08. That is a 30% yield. I'm sorry, that's a 94% yield. AMZW, Amazon, went from 32 cents to 40 cents. That is a 42% yield. A new one, ARMW. It's on ARM. The ticker's ARM. It is I believe, a semiconductor company. I'd never heard of them. But they paid $1.17 their first declaration. That's 116% yield. That is the winner of Roundhill for the week with that yield. AVGW, which is Avgo, went from 70 cents to 64 cents. That's a 62% yield. Another new one, BABW on Alibaba, declared 97 cents. That is a 97% yield. BRKW went from 20 cents to 16 cents. That's a 23% yield. COIW went from 46 to 65 cents. 92% yield. Another new one, Costco, COSW. First declaration, 24 cents. That's a 26% yield. It's Costco. I mean, probably pretty stable, but it's not going to pay massive yields. Goo on Google. 57 cents to 56 cents, 42% yield. HOOW, 85 cents to $1.26. That is an 81% yield based on the average of the last three. That's how I do things. If you haven't seen the channel, that's how I get my yields, because any one yield, is, you'll see they're all over the place. So I like to get a little bit of an average. METW went from 41 to 47 cents, 65% yield. MSFW, which is their micro-strategy. I'm not calling it strategy anymore. I don't like the name. It's micro-strategy as far as I'm concerned. 27 cents to 29 cents. That's a 35% yield. I'm sorry, that's Microsoft. MicroStrategy went from 35 to 37, 85% yield. So you're still getting some yield on strategy, MicroStrategy. NFLW, Netflix, 29 cents to 10 cents. That's weak sauce. 44% yield based on the average of the last three. NVDW, NVIDIA, 47 to 48. That is a 54% yield. PLTW, which is a Palantir underlying, 99 to 68 cents, 96% yield. TSLW, Tesla is the underlying there. 83 cents to 43 cents, 85% yield. And another new one, UBEW, that's based on Uber. First declaration, 77 cents, 76% yield. So, as a whole, the underlyings were up 1.78. The Roundhill funds were up 2.06. They captured 116%. 1.16, like I said, 1.2 is kind of the target there. Annualized yield is averaging 60%. If you look at all of Roundhill, including the ones that declare earlier in the week, WPay, some indexes, etc. But what do we want to talk about today is Ulti. And where'd it go? Slow load. Okay, Ulti. Rec shares, let me go to rec shares that I cover. Those are growth income. So you get lower yields. They are averaging 41% yield. But they're growth and income. They're not as capped on the upside. They only do covered calls on half of their synthetic positions. So if a stock goes way up, then they can capture some of that upside. These prices are not updated. Don't mind those at all. But that's the gist of it. Ulti, which is started trading today, $25. It's at $25.81. It's different, and I like it. I'm not buying it yet. I'm waiting for some a distribution to see kind of what they pay. But I think it's going to be in the ULT territory, ULTY. They're paying 80 to 90% ULT. Ulti, I think, could be close to that, if not more. So we're going to keep an eye on that. But anyway, this is the Rex Income Max option. So it's not the same as their other ones. This is not a growth in income. This is Income Max, which is, we're degenerates. This is why we're here. But I just want to show you a couple of things. Fund assets, $5 million. Brand new. Distributions, well, not next week, nothing, but then the following week they declare Wednesday the 12th, ex-date is Thursday, payday is Friday the 14th. So this is a Friday payer. All of the other rec shares that we cover are Wednesday payers. Declare Monday, pay Wednesday. This will declare Wednesday, pay Friday. So you get the gist. They're trying to compete with some of the others that have multiple paydays. Roundhill has a payday every day. So interesting there. Let's look at the holdings. I just want to look at one holding, which their biggest holding, which is 4.65% of the portfolio, is Sarepta Therapeutics. I've never heard of them. I did download this. There's a lot more than it shows here. So this is the holdings. They own the underlying. They do a at the money. They sell at the money call and put. Then they buy out of the money call and put. And I'll explain that in a minute. But I love this strategy. I've actually traded this strategy before on SPX very successfully, except I didn't hold the underlying, and they do. So it's a little different, and I'll explain it to you. But anyway, they hold Sarepta Therapeutics, 10,000 shares. Then they've got, these are their bought calls and puts. Let me show you the chart first. And I put some lines on here to show it to you. So they sell an at the money, I think it was a 23 call and put. And right here. So they're making income on these options, calls and puts. They buy a call out of the money here to protect the upside. Because they're selling here, if it goes past this, they're losing, but they're capped on their loss. Same thing with the bought put down here. If it goes down past this strike, they're capped on that loss, and I'll explain that in a minute. But this is Sarepta. Let me go down. I think that's all I want to cover with that. Yeah. So we went over the holdings. I asked. I love this strategy. Let me just show you this. And of course, my internet's really slow today. So I hope my audio is not staticky. It has been. I moved my microphone a little bit back, and hopefully that helps. If not, yeah, if you got any ideas on that, if you experienced that, let me know. But this is what they're doing. They own the underlying. They sell at the money call and put. That's the income. They buy an out of the money call to protect from too far, on the upside. Then they buy an out of the money put to protect too far on the downside. And I showed you here. Really slow. I apologize here. They sold a call and put at this strike. They're both at the money. I think it was 23. And they're at 24 now. Then the protection is this call, bought call, and bought put. This is a neutral bullish strategy. It makes the most money if the price stays right at that $23. They start to lose money, as it goes higher. It is a neutral strategy. Now, why would, and I looked at, let me show you, well, I didn't pull it up here, but Sarepta, the IV is insane. It's over 100%. Why would you do a neutral strategy on a high IV stock? I'll show you. Look at the trading range. This is a month worth. This is early October. It's just up and down, up and down. Before that, trading range, and then it shot up. Trading range. So they're in it. They're in here. I like this. Could it go against them? Yes. And that's, we're going to wait and see. I'm not buying any yet, but I love the strategy. High IV, so they're getting massive premium on the sold call and put at the money. And as long as this thing just stays in this little trading range, bank. So let's go back to Grok. I love Grok. This is called a reverse Jade lizard, also called a reverse lizard or a stock plus synthetic strangle hedge. I've done strangles. I love strangles. I've never owned the underlying when I do them. But I like it. And how does it work? And I assume this is on the rest of their positions. I'm just showing Sarepta because it's their biggest holding. But basically, it's a bullish position, base position. They own the stock. I think it was 10,000 shares. The example here is 100. One at the money call they sell. They collect the premium. They're capped on the upside. One at the money put. Same strike. They collect the premium. Obligates to buy more shares if it's assigned. But that's where the long call and put come in. They're out of the money. Protects against a large upside move beyond the short call. And the long put protects against a downside move. So this is a neutral strategy. We want the price to stay right at that 23. A standard Jade lizard is short at the money put, short out of the money call. So a little different because these are both at the money, same strike. Reverse Jade Lizard flips that risk profile. You own the stock, you sell an at-the-money strangle, you buy out of the money strangle. So it's defined risk. It's bullish because you own the underlying, but neutral bullish. You don't want it to go up too much. And if you like, charts and stuff and graphs, but maximum profit is the net credit received from the at-the-money strangle. Remember, huge IV, so these premiums are high. They're selling that at-the-money call and put. They're getting that premium. Maximum loss on the downside, if it goes beyond the put, the out-of-the-money put, minus the net credit. And we can get further into that if you want. But I just want to give you a kind of a basic options course here. And then the loss on the upside is the out-of-the-money call strike minus the premium you got. Blah, blah, blah. Break-even points, at-the-money put strike minus the net credit. On the upper side, at-the-money call strike plus the net credit. You get the gist. Bias. It's mildly bullish because you own the underlying. The risk is defined on both sides. The reward is limited to your premium. But again, high IV, at-the-money stuff they're selling. So they're collecting bank as long as it doesn't move. Best environment, low to moderate volatility, which they are not. This is high volatile. Range-bound stock. It looks range-bound right now, and I think that's why they did it. They're going to manage the heck out of it. So if it really moves against them, they'll roll some stuff or get out of it, whatever they got to do. Similar to a stock plus collar plus short strangle, but with out-of-the-money wings. Again, that is the reverse Jade Lizard. I got some other stuff there, but anyway, we haven't seen this yet with these high yield ETFs. Rex has not done anything like this before. I like this. So that's what I wanted to talk about. Really, was what's this thing going to do? I have Uber up here. Again, my internet's really slow, but let's look at Ulti. Not going to call it Ulti because there's only one Ulti. Again, started trading today, and this looks dramatic, but this is only, opened at $25.99. The low is $25.31, so that's only like 60 cents. And right now it's at $25.90. The market sells about 13 minutes. So it's staying right there. I think it's a lot of weird stuff. But we're going to watch this. They'll pay 2 weeks from today. They'll declare a week from Wednesday. And we will certainly keep an eye on it because I like the strategy. High volatility, but a range-bound market. It's got to stay in the range. Got plenty of room. Again, you lose a little bit of potential profit here, but you're still making profit here because your old put is making money there. So we'll see. We'll keep an eye on it. And the fact that they did this and they've got earnings coming Monday on Sarepta. Insane. I wouldn't do this trade myself, but like what they're totally degenerate. And that's just one of their holdings. I counted, I think, 20 currently holdings. If you see the security identifier number here, these are they actually own the stock. And you can see that's their biggest one at 4.65, 10,000 shares. Gemini Space Station, 13,000 shares. So on and so forth. It's pretty spread out. There's about 20 of them. And then they've got that reverse Jade Lizard on all of them. I assume. I haven't looked at the others, but I assume that's what they're doing. And that, the prospectus says they can do whatever they want. It's diversified because they got a ton of stuff here. And we'll just wait and see. But I love it. Anyway, happy Halloween, everyone. Have a great time. Be careful out there. Make good choices. And tomorrow we will do our prediction video. We'll predict all the declarations coming next week. Not on this one because they don't declare next week. But I think we're at 113 funds now we cover. I'll predict every single one of them. Are they anywhere close to being accurate? Probably not, but it's fun. And then Sunday we'll do our top 10 high yielders. That's all about yield. We are income chasers. We are stacking shares and collecting income till we can retire, and then we'll change it up a bit. But that's what we're doing. So have a great day, and we'll see you on the other side.